The epic collapse in energy prices taking down stocks for a second straight day. Oil falling another 36%. And check out the collapse in the USO oil ETF, losing a quarter of its value. That's just today. Your next guest says this historic drop is not done. Let's bring in Michael Novogratz, the founder of crypto fund Galaxy Digital. He's also former macro hedge fund manager at Fortress Investment Group. Mike, great to have you with us. Great to speak with you.
And welcome back and congratulations.
Thank you very much. I want you to put your old hat on as a hedge fund trader. In this sort of market environment, where do you see oil going, and what would be your next move if you're still trading commodities?
Listen, so I think the oil move is important for a bunch of reasons. One, it shows just how much demand destruction we've had, right? I mean, oil trading to zero or through zero. But just as importantly, when major markets break, and the oil market broke yesterday, right, trading to negative $40, and it broke again today with the June contract collapsing and hyper volatility, it sends a message that something's not right. I remember in 2008, everyone thought swap spreads could never go negative. And 30-year swap spreads just a few weeks ago were minus 80 basis points. And so you have these paradigm shifts, and markets aren't prepared for that yet. And so I think, listen, we had a huge rally off the lows in stocks. Everyone got kind of, okay, we're going to get out of this thing at one point. 2 bad days in a row. My sense is the stock market's going to trade heavy for a while, and the commodity, the crude market will trade heavy. You know, will it go through zero again? I'm not sure. A lot of this was USO. USO, the ETF, was all in the front month contract, which was trading at a huge discount. They basically, halfway through the day today, or close to the end of the day, said the old USO doesn't exist anymore. We're going to kind of recreate this product and remake it and roll out at least 2/3 of the exposure to the next couple contracts. And so I think part of the volatility today was just that ETF getting crushed. What's a little bit sad is if you look at the big buyers of that ETF over the last 3 days, you know, you can look on Robinhood and all the retail platforms. Retail piled into this ETF at the exact wrong time. And so I think a lot of the pain was actually retail, not professional.
Yeah, I mean, that's the problem with the structure of these sorts of instruments that rely on futures contracts. Michael, just more broadly, you know, if you're somebody who normally trades futures contracts, does this sort of throw doubt? I mean, do you start thinking, you know, does this futures market, will we see this paradigm shift, as you call it, or a broken market happen in other commodities?
I think there's a possibility. I mean, you look at the corn market, and if you look at a corn chart, you know, $3 has been support for a long time. It tested it today. It bounced out at the end of the day. Corn is 35% of U.S. corn production goes to ethanol. You know, crude collapses, ethanol prices aren't going higher. And so you could see the corn market get whacked. And next thing you know, we're going to be talking about farmers and needing to subsidize farmers. And so what it does tell you is to open your mind to things that you didn't think could happen might happen. And so there's just an increase of volatility, potential volatility out there. And it's not going to go away for a while until we kind of, you know, renormalize the economy, which looks like it's, you know, 6 months at best.
Are you getting the itch? I mean, we know now that you're focusing on cryptocurrencies and the opportunities there specifically, but are you getting the itch to step in and take advantage of some of these potential breaks in markets?
Oh, I always trade. I have 2 hats. I have a macro portfolio, and I trade it as aggressively as I ever have. And then I have the crypto business. And, you know, they're very much linked. I think crypto right now, hard assets, so gold. I have a big position in gold, a very big position in Bitcoin. I think Bitcoin has this moment right now where just today we did another $500 billion of stimulus, just money growing on trees. And my mother taught me when I was young, money doesn't grow on trees. And so as we have more and more just fiscal stimulus being monetized by the central bank, more and more people I talk to want to find something with scarcity. There are only 21 million Bitcoins ever going to be mined. 87% of them have already been mined. Next month, the inflation rate gets cut in half. And so there's a really good story. And the problem we've had up until now has been one of adoption. Mm-hmm. And I tell you, I am seeing more and more people starting to buy it, calling me up, wanting to learn about it. And so my sense is you're going to have the macro tailwind plus the adoption tailwind happening in Bitcoin. Gold already has its story. It's going to put new highs in this year. And so I think that's a really powerful story that policymakers are going to continue to play into.
So you said you're trading your macro portfolio as hard as you ever did. What exactly are you doing? I mean, you say gold's going to go high. It sounds like you're long gold.
So I'm still long gold. I've been shorting stocks the last week. I don't think we're going to have a collapse of the market again. One of the things that was unique to this collapse versus say '08 was that by the time we bottomed at whatever 2180, I call it the Bill Ackman bottom, the liquidation was almost complete. Partly because the Fed provided so much liquidity, people, if they wanted to sell, could sell. In '08, I had tons of mortgages I wanted to sell. There was no bid. So you never really got yourself flat to where you wanted to be. Here, anyone who wanted to get out could get out because the Fed literally put so much, foam on the runway.
But you're still short the market despite all of this.
I am because we bounced 35, 40%, and some stocks bounced 100%. So I now think we're going to trade soggy. I think we could trade back to 2,600. It's more of a trading market. I don't think we put in new lows. The liquidation was complete. There's not that much stock for people to sell. But the economy stinks, and it's going to stink for a while. And so, fundamentals will weigh on the market. And so I kind of think we're, a 2,200, 3,000 range on the wide, and in the tighter range, we're probably 2,900, 2,600. And so I sold a bunch up top, and I'll buy them back at 2,600 and look for other opportunities in commodities and currencies.